In this video, I want to go over two different trades that I took on the S&P 500. I have a live recording of what I saw at that moment, and I'm going to replay it to you all so you all can understand my thought process, why exactly I entered, where my stop loss was, and my overall thought process for the trade. We've been taking some very, very good setups, and I've been focusing heavily on scalping, fast entries, and faster exits, and confirming a lot of my trades using some order flow analysis. Before we get into the lesson, I recommend everyone to follow me on my Instagram at InvestaTrade. I'm going to post a link in the description below if you do want to follow me on here. I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. You're seriously missing out if you're not following it. But now let's get right into these trades. To gain context, let's go over the pre-market plan. I post these every single day in my Discord, setups I'm watching, levels I'm looking out for, and potential trading scenarios that I am personally looking to play myself. Now, in the S&P 500, this was Wednesday, October 19th. We were watching 3709 demand, which is this green box. And I said a bounce out of this level is not very convincing for me, and true upside and strength will come once we can bid above this pink box over here at 3740, 3750. So when the market opens up, we get a strong rally out of this zone. I didn't really see anything valid or convincing that was telling me to take the market long at this area. And then the market pulled back down into 3709. Now, really what I liked here was the market broke below the overnight low. And what this tells me is you are going to have a lot of traders looking to sell the market, expecting the market to sell off, be extremely bearish, and see continuation to the downside, especially below an area like pre-market lows. So with the boosted type of liquidity from a lot of retail shorts and inside of this 3709 demand zone, I'm looking for ways now to potentially play the market to the long side. So I'm going to show you this chart right here. And we did rally, and just by looking at the chart, other than this little higher low right here, there's nothing truly convincing to take the market long off of demand. Like I said earlier in the video, 90% of my trades have some type of order flow analysis to confirm the setup and make sure I'm looking at the time and sales level 2 to kind of confirm if I am on the right side of buyers in the market. Now, to add on top of this was the setup. I want to go over a higher time frame picture. And if you can look at the time of this setup, the market was in a very balanced range where we don't have a clear direction to the up or downside. Dips are getting bought, rallies are getting sold into, and we're kind of just consolidating. I could even go to a smaller time frame, and you can see the market is in a very, very tight, balanced range. With this context, I have the mentality to not only scalp, but also to take profits fast, because I know in a very balanced range like this, where the market is really not finding a direction, we're just going up and down, I know my edge for continuation is very, very slim. So I have a scalping mentality to take profits fast and look to capitalize on a very fast move. So the time of entry down here was at 10:05 Eastern when the market began to rally up. I got long at 3517 when the market looked like this. And what we're going to see on Bookmap is I'm going to replay this data here. We're going to see the market come down, and 3709 is our demand zone. So we had a large sell-off. This is where I explained the retail traders selling into a low at daybreak or selling into a pre-market low, providing liquidity for buyers to get filled at this demand zone. If these sellers go underwater, the market's going to reverse. These traders are going to stop out, and it's also going to fuel a further rally higher if this could get met with strong buying. So using this type of analysis, spotting these sellers at the low, again, you can't really see this from a chart. This is why I've been confirming 90% of my scalps with Bookmap or any other order flow analysis tool. We also see on the volume profile, large amount of volume being transacted down here at this demand zone. So with this being said, I spotted this little area of resistance at 3715, 3717. So in the voice chat, in the live trading feature, in the Discord, what I was telling members was if we can break above 3715 to 3717, I am going to look to take the market long. I'm going to first target a very, very quick scalp into this higher volume area near the highs around 3723. If this is met with strong buying, my next target is going to be the high at 3730. So this is essentially what it looks like on the chart. I was waiting for a strong break above 3717, 3715, this little area of resistance. First targeting this area, and if this was met with strong buying, I'm not looking to sell there, and I'm looking to sell at the high around 3730. This is at 10:05, my exact point of entry. What I want everybody to see here is look at the strong aggressive market buy above 3715, 3717, and that was my confirmation to get in long with everything that I've been explaining so far in this video. So I'm going to hit play. I'm going to fast forward it. We see an offer there at 3715, and then boom, a strong break above this level. Now, when I'm scalping, I am looking to take fast entries. The problem with a lot of traders, and again, this comes with experience, this comes with screen time, this comes with actually being in the battlefield and learning from being in the middle of the battle. You cannot hesitate. If you hesitate, you're too scared to enter, you don't know if it's going to work out or not, you are going to miss the trade, or you are going to screw your risk to reward. Now, the problem with this setup after my 10:05 entry, and I'm going to be completely honest here, was I did not have a valid stop loss that I was so comfortable with, and I was kind of like winging this trade. A lot of my scalps tend to work out right away, meaning I've timed the market pretty well, and it works out in my favor pretty much immediately after entering. However, when I entered this setup right here on that strong breakout, we did get a pullback about 5 minutes after I entered into 3710. So my original stop loss, 3708. And to be honest with you guys, it was not in an area that really proved my analysis incorrect. It was at an area that I just felt comfortable that if the market broke below it, my analysis would be incorrect. And I was comfortable getting out of that position for a loss. So I really didn't have a structured stop loss that proved my analysis incorrect. And that was kind of my mistake with this setup. It worked out. It could have not worked out in my favor, and I could have taken a loss. But it's just focusing on a high quality setup. So now I'm in long with this. Here's that little pullback. And how I view this is everything looked bullish to the upside. And a lot of traders did get long over here. And this was a quick stop hunt. And you're going to see this on the next setup where the market pulled back and probably stopped out a bunch of traders that did chase that breakout, that didn't implement proper risk management and just got out when they felt comfortable. And then the market started moving up. And then look at all this aggressive buying coming into the market. I'm going to replay this. And this is the type of action you want to see if you're playing a breakout. Look at that very, very strong buying. I was walking members through this position exactly when I was in, exactly when I was out, so everybody could understand my thoughts, what I was looking at, and why I was looking at. So at 10:15, I got out 90% of my position here at 3730 at the high, just like I said, and my real target was 3740 at this supply zone above. The market pulled back temporarily. Very strong market aggressive buying coming in. We pull back. Again, the market's not going to move straight in your favor right away, right? We're not going to straight move up, straight move down. You're going to see pullbacks. You're going to see consolidation. If the market went straight up, then there really would not be a market. So as long as you manage the trade correctly, I got out 90% of my position here to protect myself in case the market did fail and we did have an aggressive sell-off. And I had a couple contracts left open in case the market did want to run up and I could hold for a larger mover of a type of trade. Fast forwarding it, we consolidated at the high, another strong push up with volume. And again, 3740 is that resistance level from the pre-market plan. Remember what I said? 3740. No strong rally will come if we are below this level, right? We hit 3740, we start pulling back, and that was my valid confirmation to get all out of this trade. And what it looks like on a chart is this little resistance, 3715. We broke above it. I got in long right here. Stop loss below 3708. Market pulled back. Stop loss never triggered. We hit the high over here where I got out 90% of my position. And then I sold the rest right inside of this 3740 area, as I knew this would be an area of tough sellers. And then the market rejected from there, bouncing at demand for the remainder of the day. So a couple key points here. You're going to see this with the next setup is I would not have taken this trade if I solely looked at the chart. And a lot of members always ask me, what do I look for on Bookmap? What tells me to get in or not? And that's an unknown factor. I don't know what to look out for before I get in. It's just spotting something unusual or spotting something that's convincing that buyers are present in the market, and then I get in and put risk on the table. So before the market even opened up, I couldn't have planned to getting long at 3717. I would have, not expected that at all. But with new development in the market, it presents new information, and then it gives me parameters with valid structure to get long or short accordingly, as long as I manage my risk. And it was a solid trade. I know a bunch of members that were listening on the live trading feature got long with me and absolutely killed it and capitalized on this setup. This setup I did not participate in, but it was from the plan. And if we failed to hold 3709 and 3700, this would have provided a nice short opportunity to use 3685 as a target for shorts, as that would have set up for a sell-off. And as the market broke below that level of demand, this was a good area to protect your shorts. As I said, the market could relief bounce down there at 108. And sure enough, the market hit 3685 and had a very sharp rally going into the end of the day from that. So it's just putting the pieces together between buyers and sellers using market context and price and volume analysis. Very, very powerful. Now, the trade from Thursday, October 20th, was identical to the previous day's setup, long. It was the same confirmation factors, the same supply zone, and it was identical trade. The only difference was the risk to reward was a little bit better, and it enabled me to capture a larger move and in result, obviously make more profits. The market is still inside of this balanced range. I have balanced range rules where I do not expect continuation, and I expect up or downside moves to be short-lived. So not only do I scalp, I'm scalping in the current market conditions, but also in this balanced range, but I'm also looking to capitalize on fast moves and not overexpose myself in the market with holding and expecting larger price swings and moves. With this being said, the pre-market plan on the S&P again was pretty much identical. We were bouncing overnight at 3685 to 70. That was that same level that I just got explaining where the market bounced off of yesterday. And we're creating a balanced range. No strong continuation will come inside of it, but as long as we could bounce and remain above 3685, I'm going to be focused on finding longs targeting 3740 resistance where we found sellers from the day prior. Now, I think this is important because there's ways you could look to take the market long or short and use zones as context, meaning, okay, buyers are bouncing us off this demand zone. Maybe the market opens up. Maybe we start coming up. And okay, maybe we could look to take the market long somewhere in this range if we could spot clues of buyers with the context that we just bounced off of demand. And that will be our setup. It's not always getting long at demand. We can use zones as context. So the market opened up over here. We consolidated for a little while. And also NASDAQ from the pre-market plan was finding buyers at this 11,089 demand zone. So NASDAQ had demand that we were bouncing off of, hit it, and then began to rally. Now at this point, this is what the S&P 500 looked like. It did not have demand, but I saw something that sparked my interest that really made me watch the market. So I saw we came down, we broke the low. Again, same thing. Look at this. Very aggressive selling below the low, immediate reaction, buy up, bid step into the market. And now over here, we are consolidating and flagging with a offer directly above us. This looks like a flag, right? Or a wedge where we have support here. We also have resistance / a downtrend over here. So really what I was watching for was the market to break out of this wedge, break above 3702. You can see the structure we have here on the volume profile. And we had a 700 lot offer at this area. However, what happened here was the market pulled back. This was basically similar to yesterday where we got a stop run. So everybody that got in long early before the breakout, then the market pulled back about 7 or 8 points. And this would have stopped out those who got in long up here with improper risk management. Then I start seeing the market come up after that quick little stop run to the downside. And this is when I get in long right here at 9:44 Eastern. My stop loss below 3695. I was risking about 7 or 8 points. And my original target was 3740. And this is kind of where my mistake was. Again, I could have capitalized on a larger move. But because of the current conditions, I'm looking to protect myself when I can, just in case the market does reverse on me. So what happens here and where I got long, I'm going to play the video. is right there on that breakout, right here, 3702. That large offer gets filled, large market aggressive buy. This is unusual action. This is not something that you totally see at all times. And with the context that I've explained so far with NASDAQ and the S&P, I had valid reason to try out longs. And if I was wrong, my stop loss was below this little 3695 area. Did I know it was going to work out? No. But my risk is 7 or so points to make a potential 20, 30 points to the upside, right? So now I'm in long and the market starts breaking out. Look at the increasing buying pressure coming to the market. Beautiful, beautiful, beautiful. That is what you want to see when you're in a breakout. The problem with this trade was before the market opened up, we had a little drop right here from, I think it was the jobs report in this area right here. You can consider it a supply zone. That when the market did come up into this area, I saw us consolidate for a little while, and it looked like sellers were rejecting this area. So then at 9:51 is when I got out 90% of my position, similar to the day prior, right? 9:51, the market looked like this. I'm selling into strength. I want to sell when the market is strong into strength because that's when I know I'm going to get the best fill, especially if I put, let's just say, a limit order at a specific price. I am selling into strength, especially at an area where I knew the market could reject. Then we consolidate, and at this point now, I'm boosting my stop loss higher. My entry is down here. This is what it looked like on the chart. My original stop loss was over here. Now as the market's breaking out, I get out some of my position. I boost my stop loss to this area, so I know that this trade can never ever go red on me. And even if I stop out the remainder 10%, I am still going to make money on those last 10% position. And then we get a strong push up, and I got out the remainder of my contracts a little bit before 3740 at 10:08, just because I saw slowing down on the tape and I didn't want to lose out on profits, especially with the conditions that I've been mentioning. This is the breakout. This little large green bubble right here, if we zoom in, is where I got the market long. Increased buying pressure through that level. I am out right here, 90% of my position when the market looked like that. Then we break out again. And at this point, I'm looking to sell the remainder of my position into the strength. And then boom, as soon as the market starts slowing down right here at 10:08 is when I get out my position. I was comfortable with my profits. Yeah, we were 10 points away from demand. Yeah, I could have capitalized on another rally like this, but I'm out of this trade. And guess what happens? We hit 3740, put in a lower high, and then the market aggressively sells off, putting in lower lows, lower highs all day. The same 3740 area of resistance or sellers from the day prior that we rejected hit it again today, broke the previous day high, and had a very, very large sell-off. So the point I'm trying to make here is I would not have taken these trades if it was off of the standard candlestick chart. I need to know what's going on behind the candles via Bookmap, via any other order flow tools. It doesn't matter what you use, but I need to know the true intentions of buyers and sellers, and it helps paint the picture intraday, especially since I have been scalping a lot of my trades recently in the current conditions. I've been trading extremely, extremely well. The setups have been working out very well, and the best trades, the scalps, most of the time work out directly and right away in my favor without really the market going against me. And that's how I know I have a good trade on my hands, and that's how I know to capitalize. So I hope this video helped. If it did, drop a like, comment if you have any questions. I'll go through the comments, and definitely check out the links in the description below. But I'm going to end the video on that note. Peace out.